Hi everyone, let's go through my preferred and alternative high time frame, medium time frame and low time frame scenario in this video, starting with my preferred scenario on the high time frame, where this is a W, X and then a Y, with inside the red X over here an ABC expanded flat, currently working on the fifth wave over here after a very nice bounce of wave 4 on the 0.5 fib, taken from the low of 2 to the high of 3. You can see that wave 5 has basically multiple targets, as these are the target areas for a wave C, with the white box over here being the most common wave C target between 27.7k and 34k. Something else that is important to note are the Fibonacci retracements over here, taken from the all-time high to the low of W, with then the red wave X usually having a minimum target of the 0.382 that currently sits at about 29.7k. Another important thing to note are the Fibonacci's here on the right side, because these are wave 5 targets taken from the high of 3 to the low of 4. It's just a normal Fibonacci pool over here, and you can see that currently we hit a minimum target for the wave 5, hitting the 1.236, with the maximum target being the 1.618. However, as we know, crypto and Bitcoin can be volatile. You can also expect still this target, maximum target for wave 5, to be passed for a little bit more upside. However, it is important to know these levels are here, with the 1.236 being 26.9k and the 1.618 is 29.6k. Then finally, which is something I have not yet spoken about in any other video, you can see the volume profile that I have on my chart right now, because it is that time that it becomes important to have this on the chart. What you're looking at is basically the volume profile of this range right here. So you pull the volume profile from basically the beginning to the range to the end of the range, and then you get the value area high, the point of control and the value area low of this range. And these are very, very important volume-based levels, and in my trading I really enjoy volume-based levels, as they are usually very well respected. Now, as you can see, we have this red box over here that is acting as support over the past couple of years, but it could act as very nice resistance for what is coming next, for then a very nice potential short trade. Also, this red box support a resistance flip basically has confluence with the most common wave C target box, the white box. It has confluence with over here the minimum target for wave X. It also has confluence with the 1.618 wave C or wave 5 target in this 1, 2, 3, 4, 5, and even more importantly, the high time frame range value area low, which is the wide line on the chart right here, sits at 28,837, also is part of this support resistance flip, as well as part of the most common wave C target. And I will have this range on my chart throughout the whole video, because this one is now going to play a very important role, because if price manages to get accepted inside this range, maybe even with a backtest, and move to the upside, the next level is basically the point of control, which sits at 38.7k. And what you've just seen as well is that a rare wave C target is the orange box over here. It is very, very stretched for wave 5. It's very far away from where we are now, but nonetheless, it is a rare wave C target, which goes all the way up to basically 40k. However, the point of control of this very, very big range sits inside this orange target box. So it is definitely something to note. Now, when we look at the potential trade setup here, of course, take into account that the stop loss area might be inside the rare wave C target. However, as it stands now, with all the confluence we have over here, one could start to ladder into a potential short in the common wave C target area, shorting it to the downside for then a potential wave Y, where the first potential target is currently sitting at about 12.7 or 8k, which also happens to have a very nice confluence with this area over here that we never backtested after the bull run of 2020. So that is quite an interesting target area. However, wave Y does have deeper targets, as you can see. This is simply the first target, but there are deeper targets, even all the way, I don't want to scare you guys, all the way down to basically 5.4k and the 1-to-1 at 7.5k. But the first minimum target, let's keep it positive, is over here at about 12.8k. And once the high of this wave 5 X and C is basically made, that is when we can get more accurate targets for this potential wave Y. Now, instead of the bearish scenario, let's switch to the bullish scenario on the high time frame. So the bullish scenario is that from the all-time high, the bear market is already finished with the end of wave Z. We then had a W, X, Y, X, Z. There's, however, two reasons. It's not necessarily my favorite, so it's a little bit of an alternative in my opinion. That is that wave X did not hit the 382 Fibonacci over here, which is quite rare, or actually very rare, because it usually is a minimum target. And wave Z retraced to the 0.618, taken from then the high of W to the low of W to the high of X with the trend-based fib extension tool. And this is a rare target and not a common target, because the common targets are down here. However, it touched a rare target at 15.9k, which is something to note as well. However, if this is indeed the bullish scenario, then the first resistance for a potential wave 1 is still this high time frame range value area low sitting at 28.8k, for then again a potential trade to the short side. And I mentioned risky because, again, shorting in a bullish environment is risky. Whatever people say, it is a risky thing unless you have a very clear strategy, very clear entry requirements, patience and discipline required. But then we could potentially trade it to the downside for a wave 2. Now the trading setup is not too much different as the scenario I just showed you, like the bearish scenario where we go eventually to the downside. The trading setup is basically the same. It's just that the target of this wave 2, of course, is not as deep as a potential wave Y all the way down here. Because for a wave 2, the most common targets are the ones that you see on the chart. Well, actually, it's the 0.786 till the 0.5. Like, these are the most common levels. The 0.382 is rare, and also the 886 is rare. But these ones are common levels, with the golden pocket in the middle, the 618 and the 66 being the most common target for a wave 2. Finally, something I like to talk about is the volume of the impulse that we have so far in this potential either wave C or wave 1. And you gotta, like, Elliott waves is also very dependent on volume. I don't necessarily talk too much about it. Actually, today this is the second time. But also the volume over here is very nice for an impulse. As far as it stands, this is then a wave 1, and as you can see, volume is moderate. Then in this wave 3, so we have a 1, 2, and then in this wave 2, you can see the volume going down as well, which is very typical for the correction phase. Then in a wave 3, volume is accelerating. The highest volume so far in this whole impulsive move was in wave 3. Then we have a corrective structure, wave 4, where you can see volume going down inside this wave 4 till the low is made, and that is when we get a push to the upside with a little bit more volume as well, or once more. However, it's still less as wave 3, and usually wave 5 has less volume than a wave 3. There are exceptions, of course, but so far it actually looks like a very nice impulse, and I hope that reading the volume together with Elliott waves might help you in your trading as well. Let's go to the medium time frame scenarios then, where I am looking for a 1, 2, 3, 4, 5 with, again, I keep the volume profile on the chart, so you still see the high time frame range value area low over here. Currently, my preferred scenario is a 1, 2, then eventually we have a 3, 4, 5. Something I actually didn't mention in previous videos is that the 0.382 was hit in this retracement, which I still, like, I can almost get angry about it, that this is the retracement for wave 4, that if this is a 5-wave structure in an A, this is a B, and this is a C, this C did not even hit the minimum target for wave C. Man, crypto, man, and volatile stuff, sometimes it doesn't respect the theory, which pisses me off, but hey, it's at the same time, it's just the way it is. So a 1, 2, 3, 4 bouncing very nicely on the 0.382, very, very well respected, and also a common target for the wave 5, and then looking for a wave, for wave 4, looking for a wave 5 to the upside. So far, so good. The minimum target for the wave 5 is the 1.236, sitting at 27.2k, taken from the high of 3 to the low of 4. And then the max target is usually about 28.1k, which is the 1.618. However, another target for wave 5 is the 0.618 that you see, which is a trend-based fib extension, taken from the absolute lows to then wave 3 to wave 4, put on the toggle on the 0.618, and that is another target for wave 5. I would not mind wave 5 stretching a little bit to the upside and at least hitting the high time frame range value area low, which also happens to be one of my target boxes over here, as it has a few other confluences in this target area. The others, however, are not as important as the high time frame range value area low. Another thing to notice is that inside this target area for a wave 5, we also have a target box, the blue target box over here between 27.2k and 27.6k. And inside this target box, there's a daily naked point of control, a time naked point of control, and we have a little bit of a range. And there's a range basically on the left side of the chart. If I zoom out a little bit, it's the bottom of this range over here. So it could act as a little bit of like a support resistance type of flip, basically. So that is another area to at least look at. Then and this is, by the way, the bearish scenario, that we then go to the downside, and that this is then the high of wave C, the high of X, and that is then our start, or basically, yeah, this would then be the beginning of a big move to the downside for wave Y. The bullish scenario is a little bit more messy. Let's get rid of the targets, where over here what you're looking at is another way to figure out a potential target for a wave 5. So what you're seeing right now is the same wave 5 targets over here. We still have the range, value area low. We have the 0.6 still on our charts as well, so everything is the same. There's one difference, and that is the channel that you see and the scenario. So in this scenario, this is not the end of wave 5 and therefore the end of wave C and the end of the red X before then a big move to the downside. No, in this scenario, the bullish scenario, this is only wave 1. We then get a 2 and then another 3, 4, 5. And looking at how high then this wave 1 is going, one could probably think of a ending diagonal, which takes a lot of time, where wave 3 is going to be shorter than wave 1 and wave 5 is going to be shorter than wave 3. Therefore, the impulsive moves are not going to go all the way up, but it takes a little bit more time, and the impulsive moves are shorter. Now, with the channel can also act as a target area for wave 5. So what you do is, once wave 4, or the high likelihood as wave 4 is in, you pull the channel from the low of 2 to the low of 4 to then the high of 1. Guessing a little bit if this is the high of 1 or this is the one. However, then eventually the high of the channel over here somewhere is a target area for a wave 5 as well. So especially if a wave 5 would move, like whatever happens, and then eventually moves to the upside and hits the channel, including the potential other target areas of a wave 5 matching that like touch of the channel, there's quite a high likelihood that wave 5 might be in. So it's just another trick in the book, I suppose. But then the wave 2 to the downside, again, most common targets over here. And from this wave 2, we could then potentially long to the upside. But hey, that's very far away. So let's just stick first with the low time frame count that I want to show you, where more locally, this is my alternative scenario. This is the bearish one, where this is the green 1, 2, 3, 4, 5. Now, in this scenario, the wave 4 not allowed to close higher time frame candles below the 0.5, which sits currently at about 25.6k. Potential long setup can be laddered from the 382 all the way down to the 0.5. Stop loss somewhere above, and then trading it for this final leg to the upside for a wave 5 to either or, like this target area or the target area with still the high time frame range value area low over here for, of course, a better risk to reward. But the question is, how quickly will we go through this target area? Now, my preferred scenario, however, on the low time frame is this one. And you can also see that it's my preferred scenario because I've been messing around a lot more, where in this scenario, and let me put the volume off as that's not important, we actually have a 1, 2, 1, 2. So we have a 1, 2, 1, 2, and then a white 1, 2, 3, 4, 5. With then inside this white 3, we have a 1, 2, 3, 4, 5. So it all works quite nicely together. Then we have the blue count, which then is a 1, 2, 3, currently looking for a wave 4, and then a wave 5 in blue, which then is wave 3 in green. So we have a 1, 2, 3, 4, 5 in green. The target area for wave 3 in this case would be the FIBs that you see, the 3.618 and the 4.236. These are still common areas, common target areas for wave 3, which also happens to have very nice confluence with the target box. So it would play out very, very nicely with the target boxes as well if in this scenario we would come to the downside for wave 4, move up to finish this green wave 3 in this target box, move down once more for the green wave 4, and then move up for the wave 5 to then hit the high time frame range value area low as a very important resistance area. Now, if we then look a little bit closer to the potential wave 4 scenario that we have, I think this box over here is very important. You do see 2 Fibonacci times. Those are important as well. The one for Fibonacci time is taken from let me think here. Oh yeah, taken from the high of this wave 1 to the low of this wave 1, and then put it on top of the high that we recently made. And basically what you then do is you compare the length of this wave 2 with this wave 4. So that is then the 1-to-1. Usually wave 4 is longer. So usually wave 4 is longer than this 1-to-1 over here. And the second Fibonacci time that you see is taken from the low of 2 to the high of this impulse, which is wave 3. And then you double click over here. And what you now do is you compare the impulsive move in time with the potential correction of a wave 4, and that is the other 1-to-1. And wave 4 ending in between this box, which also is between the 0.382 and 0.5 retracement taken from the low of 2 to the high of 3, would actually be very nice. An additional confluence, which I don't really show too often on my chart, but I do use different confluences, is also this over here, what you see, which it's this sign. If you want to look for it on your chart, it's the FIB speed resistance fan, as it is called, pulled from the low of this 2 to the high of 3, toggle on the 618, the 66, and in this case the 75. And what you see is that over here the 0.5 FIB has confluence as well with the golden pocket speed fan basically, and over here this corner has a confluence with the 0.5, which actually is very nice. So what I would be looking for at the moment is actually not a continuation to the upside. What I would prefer, right, is a move down, which we already had, a move up, whatever high it will go, then eventually another move to the downside to hit the 382 and the 0.5 target area over here, which would also be another nice backtest of the target box we had on our chart already earlier, which you can also see was here, nicely respected as resistance, then respected as support over here. So we could backtest this area once more. And then for a potential, mark my words, potential long setup, one could ladder entries in here if it fits your strategy and your entry requirements based on what you see and how we come down. Stop loss below the 0.5 FIB, as that would be the invalidation. So I for now put it below these lows over here, and then trade it to the upside for then this potential high of wave 3 and wave 5, basically to this target box, which can be quite a nice trade. So yeah, this is what I wanted to say. I hope this video was helpful or valuable to you. I really thank you for watching, and the 400 subbies on the channel. Thanks so much everyone for supporting, and thanks for subscribing, and I see you at my next video tomorrow morning at 7 a.m. Central East European time. Bye bye.